All right, welcome. Today, we're going to be financial detectives. Our subject, Tesla. And our mission is to decode the clues hidden right there in its stock chart. We're going to sift through the data and try to understand what the market might be telling us about its next big move.
And really, this is the big question, isn't it? After an incredible run-up, Tesla is sitting on a knife's edge. Is it about to rocket to new heights, or is it about to take a tumble? All the clues are right there. We just have to know how to read them.
So, here's the setup. After a phenomenal 3-month rally, Tesla has kind of hit a wall. You can feel the uncertainty. Traders are holding their breath, asking, okay, what's next? And this moment of indecision, well, it's the perfect time for us to jump in and examine the evidence.
This quote just nails the high-stakes situation we're in. You've got this really strong upward trend, but it's running up against the very real risk of a pullback. And that right there, that's the core tension we're going to explore, clue by clue.
You know, every good investigation starts with the basic facts, so we're going to begin by looking at the most fundamental clues. Where has the price been, and just as important, how many people were trading along the way? We're going to follow the money trail.
So here's the story of the last few months. You can see this steady climb from around 290 back in July. Then, bam, a huge surge in August, all the way up to nearly 450. After that, it kind of caught its breath in September, and now it's starting to push up again. Which brings us to right now, this critical moment.
But listen, price is only half the story. You got to look at the trading volume. See that massive spike in August? It happened right as the price was taking off like a rocket. That tells us something really, really important. This wasn't just small-time traders jumping in. A surge like that means the big institutions, the big money, was buying in. That's a huge clue about the real strength behind this rally.
Okay, so our next tool helps us see the bigger picture. Imagine trying to see the shape of a forest by staring at one single leaf. It's just impossible, right? Moving averages are like taking a step back. They let you see the overall shape of the forest by smoothing out all that daily up and down noise so you can see the real underlying trend. Now, when we look at the data, we see the price is comfortably above the longer-term 20, 50, and 200-day averages. That's a classic sign of a healthy uptrend. But, and this is a big but, here's our first conflicting clue. The price has just dipped below the very short-term 5-day average. It's a small crack in an otherwise bullish case, but it's definitely a potential warning sign.
Okay, so we've got the big picture. Now it's time to pull out the specialist toolkit. These are the more advanced indicators that measure things like the energy or the momentum behind these price moves.
Think of these next indicators like the gauges on a car's dashboard. They tell us how fast we're accelerating. Is the engine roaring, pushing for more speed? Or is it maybe starting to run out of gas on this long uphill climb?
And what do you know, our dashboard is giving us some mixed signals. The RSI, which measures the speed and change of price moves, is neutral. Not too hot, not too cold. But the MACD, another key momentum gauge, is flashing a bit of a warning light. It has just crossed below its signal line, and that's a classic sign that the energy is starting to fade. The engine isn't stalling, but it's for sure losing some of its acceleration.
Okay, so momentum might be fading a little bit. But what about the underlying trend itself? I mean, how strong is it really? This next set of clues helps us answer exactly that.
And this is where the plot really thickens. The ADX, an indicator that measures the strength of a trend, is reading over 43, which is, well, it's very high. The Arun indicator emphatically agrees. The upward trend is strong. But then, the parabolic SAR, which helps spot potential reversals, has just flipped above the price. That's a very specific technical warning of weakness. So the main current is powerful, but a new crosswind is definitely picking up.
So with all these conflicting signals, how do you make sense of it? Well, we look at the price chart itself to find the key battle lines, those specific price levels where buyers and sellers have historically dug in and fought for control. First up, let's identify the ceiling. This is the price where, in the recent past, enough sellers have shown up to completely stop the rally in its tracks. For the bulls to win this thing, they have to smash through this wall.
And that number, that wall the bulls have to break through, is $43.41. A decisive move above this level would be a major signal that the buyers are back in full control.
Now for the other side of the battle, the floor. This is the price level where buyers have previously stepped in and said, nope, the price is too low, and started buying, preventing it from falling any further. This is the line the bears need to break. And that safety net is sitting right at 425.85. As long as the price stays above this floor, the bulls are still in the game.
But a break below could signal real trouble ahead.
Okay, we've gathered all our clues, the trend, the volume, those conflicting momentum signals, and now the key battle lines. It's time to put it all together and outline the possible outcomes of this whole investigation.
Based on all our analysis, the evidence is pointing to three distinct possibilities. The bulls could win decisively, the bears could take control, or they could just fight to a stalemate. So let's take a quick look at what each of those verdicts really means. Ultimately, it all comes down to those two battle lines we just identified. For the bulls, a strong, convincing breakout above that 434.21 resistance wall could easily trigger a move back towards those 450 highs. On the flip side, for the bears, a breakdown below the 425.85 support floor could signal a much deeper correction, with the next potential stop down around 415.
And of course, there's that third possibility, a good old-fashioned stalemate. In this neutral scenario, the stock simply bounces between those two key levels, 425.85 and 434.21, as buyers and sellers fight for control without a clear winner. The stock would just be coiling up, building energy for its next big move.
This final quote really just boils it all down, doesn't it? This isn't about predicting the future. It's about knowing exactly what to watch for. The entire complex story that we've just unpacked really comes down to the battle between these two specific prices.
At the end of the day, technical analysis gives us a map of the probabilities, not a crystal ball. The clues point to a powerful trend that's showing some real signs of fatigue, right at a critical decision point. We've identified the key levels, we've identified the potential outcomes. The only question left is, which path will the market choose? And that's the story we'll all be watching unfold.